Good day, and welcome to Stock News. I'm Amy, and today we're diving into two contrasting perspectives on the future of Berkshire Hathaway in a post-Buffett world. Hedge fund manager Bill Ackman of Pershing Square Capital Management is bullish about Berkshire's prospects under Greg Abel, Buffett's intended successor. Ackman criticizes Buffett's traditionally cautious investment approach, arguing it missed significant opportunities, and believes Abel's more hands-on, operational style could unlock substantial value. He pointed to inefficiencies in subsidiaries like Burlington Northern Railroad as areas ripe for improvement and envisions a modern-day Berkshire, one that aggressively leverages strategic investments to drive growth. Ackman's comments suggest that with Abel at the helm, Berkshire could become far more dynamic and generate stronger returns. On the other side of the spectrum, we recall the timeless wisdom of the late Charlie Munger, who famously asserted that 95% of people have no chance of beating the S&P 500 index. Munger's insights serve as a stark reminder that while active management can yield exceptional results, the majority of investors find broad-based index investing to be the more prudent, long-term strategy. Munger cautioned against the pitfalls of over-concentration, drawing parallels with the Nifty 50 era, when excessive enthusiasm for a handful of stocks led to unsustainable valuations and dramatic downturns. His perspective underlines the importance of disciplined, long-term investment approaches, suggesting that while Berkshire's historical success has been built on a few stellar decisions each year, attempting to outsmart the market is a challenge that few can consistently meet. When we combine these viewpoints, we see a fascinating debate about the future direction of one of the world's most iconic conglomerates. Ackman's optimism centers on the potential for a more aggressive, operationally focused Berkshire that can capitalize on its vast portfolio and untapped efficiencies. In contrast, Munger's legacy reminds us that the conservative, disciplined strategies employed by Buffett over decades have delivered sustained success, and that beating the market remains a daunting challenge for most active managers. As Berkshire transitions to new leadership, investors will be watching closely to see if Abel's approach can indeed drive a new phase of growth, or if the time-tested methods of Buffett and Munger will continue to hold sway. Technically speaking, the current market data suggests that despite the debate on strategy, Berkshire stock has historically traded with a strong long-term uptrend reflecting its resilient fundamentals. However, any shift in leadership and operational approach should be monitored carefully. Investors might consider using protective stop-loss orders to manage potential volatility as the market reacts to these new strategic signals. Thank you for joining me on Stock News. I'm Amy.